Good day, fellow investors. 190 years old together, but still rocking. And I hope you enjoyed the conference as much as I did. And in this video, I want to discuss some topics that are really applicable for investing in 2020. Of course, if you enjoy Berkshire, Buffett, Munger, value investing, smash that like button to support this value investing channel. Before starting, let's just make a quick update on the valuation of Berkshire. Warren Buffett said it very easily in the conference. We made about 7 billion in cash in earnings over the first quarter of 2022. After tax earnings, keep in mind that most companies don't report depreciation, amortization, and taxes in operating earnings, but Buffett does. So this is pure value created over the quarter, pure cash. Now, if we just go to our valuation template, you have Berkshire here, and I have used earnings per share of 15.67 that are calculated 7 billion per quarter, 28 billion over the year, and then you have also the hidden earnings because of the stock portfolio that Buffett owns, where only the dividends of these companies are expressed in Berkshire's accounting and the earnings that are reinvested are not expressed there. So I usually add approximately 8 billion, perhaps now should go to 10, but let's remain conservative and add 8 billion to the valuation. Of course, you can download this template for free in the link in the description below. Berkshire, earnings per share, 15.67 for Berkshire B, and I have put a growth rate, inflation, everything of 6% ahead, including growth of other companies. And if I expect a 10% discount rate, I get to an intrinsic value of 204, which is unfortunately 50% below the current stock price. However, if I'm a little bit more exuberant on growth with inflation and everything, and terminal multiple also expands, but that's unlikely with higher interest rates, then I am, let's say, fairly valued for a 10% return. But Berkshire is now perceived as quality, as value, as really a fortress, so investors are happy with getting a 5-6% return if I change my expected return or the discount rate. So then we are pretty fairly valued with the ups and downs and long-term investing. So now it's really well perceived quality, and for quality you have to pay. Of course, you might remember my video of when it was trading at a price-earnings ratio of 10, and I said that you will not see it that soon again, and I was pretty prescient with that call. So it is always about the perception. When Buffett is old, when he lost his touch and ARK funds are the main mantra, it's great to buy Berkshire. And it's not that great when everyone is excited and everyone is looking for safety into something that is well known and high quality. So, of course, the higher the price, the lower the return and the higher the risks. That's simple mathematics. But let's dig into what Warren Buffett did and the purchases he is making. Very important here also that justifies my valuation of Berkshire. If we look at the buybacks over the quarter, just 7 million shares, which is less compared to the activity over the previous quarter. So he has lowered the buybacks, which means that Berkshire is likely trading close to its intrinsic value and not below. Therefore, also my valuation should be pretty in line with what Buffett thinks. However, Warren Buffett spent 52 billion investing into stocks, which means that he thinks that many names out there are trading or were trading below intrinsic value. So just here, purchases 52 billion. Okay, there were also some sales, but slow sales over the quarter. We'll see later. So what we know, what he bought is Activision, merger arbitrage, Chevron, Occidental, big bet on oil, and also Apple. Unfortunately, with Apple, he said in the meeting that the stock went up, so he stopped buying. Otherwise, who knows how much we would have bought. So he might be easy on the trigger again and spend more on Apple, as he spent 400 million in a day when Apple reached 150. So for him, it's a good investment below 150, and it might get close again. Again, if we go to my table and we go to the valuation of Apple, with the earnings, the cash flow per share, and 8% growth ahead, the intrinsic value isn't that great. But with better growth and a similar multiple that it is now at 30, then it is even below intrinsic value. I don't think that Buffett expects 10% returns, but he's happy now with 6-7% plus the protection that he gets from owning businesses, which is something we'll discuss a little bit into the video. Next purchase, Occidental Petroleum. He bought 14% of the company, or quarter of the float, in 11 trading days. And you can see here how he spent 10 billion on banks, insurance and finance. So from 26 billion to 36 billion, 4 billion on consumer products, almost 5 billion, and most spent on commercial, industrial and other industrial, oil, Occidental and Chevron likely. And the 14F, the required document that they have to report 45 days after the quarter ended, that will come out likely next week, so I'll make a more detailed update on the new ownership, new stocks that Buffett has made in the first quarter, and I'll also make Occidental and Chevron special valuation videos because a lot has changed there. So we'll touch a little bit on that today, but we'll go really deep next weekend likely. So peak day purchases was March 4th for in general buying, but it wasn't anything special. He's just, when he sees value, he really drills down on it. And we can see that then the S&P jumped. Here he bought Apple, but now we are back into buying territory, and we'll see what he'll do next quarter. But we'll discuss deeper the stocks next week, but let's discuss why Buffett bought. Why did he decide to spend 50 billion now and not 2 years ago, not 5 years ago, but really now? And Charlie Munger summarized it perfectly. He said it's better than holding treasuries now, and that's it. That summarizes everything. 4 words from Charlie Munger tell you all you need to know. And that is very peculiar also with Buffett and Munger, and something I want to focus on here. They were waiting and waiting with 100 billion, 150 billion in cash, and they just started buying this quarter. Why this quarter? And they said it's because it's much better than holding treasuries now. Even if the 3-month treasury that they usually buy, their maturity is usually 4 months with the cash or treasuries that they hold, is going up from 0 to 0.82, and also long-term bonds are 3%, but they decided to spend the money now, of course, because now the game changer for their money spending is inflation. While there wasn't inflation, Buffett was happy with making 0 on his money and just holding treasuries and waiting for the big opportunity. But now, with 10% inflation and the forecast for inflation constantly going up, up and up, this is just pure value destruction, and therefore Buffett said, any cash that I hold that is there for no safety purposes is destroying value for Berkshire shareholders, and therefore is better to act now. Because even if you compare 3.23% with 8.5% inflation, likely to go higher, also globally higher, then you know it's idiotic to hold cash. And also, if we look at what happened, so financial crisis, balance sheet expansion, start of pandemic, balance sheet expansion, and now interest rates are going higher, but still not enough to cover for inflation. Because compare 8.5 and 0.875 when it comes to the Fed's rate, you can see that there is still an 8 percentage point, 800 basis point discrepancy and pure value destruction there. And we don't know when it will end, so Buffett said, doesn't matter, I don't want to destroy value, let's buy something that is protective of inflation, and still does better, and that is owning businesses. And that's also the simple answer to apply not only in 2022, especially in 2022, but in general. Owning businesses has been shown for history is the best way to accumulate wealth and compound. And the reason for owning businesses now is simple: money printing. What do you think the Fed will do with the next recession and crisis? What do you think governments will push central banks to do? What do you expect in the next crisis? Any crisis, there you have checks mailed to your inbox, free money, salaries, whatever. This is now what everyone expected, and once you get high on it, on free money, it's the biggest drug out there. So next time, again, more money printing, more inflation. That's the name of the game. So even Warren Buffett knows I better spend my money. And he did a lot of spending, Occidental Petroleum. And this is something that I want to discuss. So oil was at 90, and then February 25 he started buying, and he bought for 2 weeks. He bought really big, and this is also something that's very important. So Buffett didn't buy oil when those oil stocks were cheaper. So I remember making video in October saying that oil stocks are a buy. Okay, he started lending money to them and preferred shares and so, but he waited to go in big here. What was the game changer? Well, the game changer was Russia doing stupid things and wiping itself out from the global map. It's going to be like Albania in the 1980s, North Korea. That's the future for Russia, which means that the whole market of oil that we'll discuss next week has changed the supply and demand balances. That means that likely oil prices are going to be higher for longer term compared to the previous demand and supply balance, and therefore they went in big, which means cash flows compared to zero on treasuries and destruction of purchasing power, and that's why Warren Buffett started buying now. What is very peculiar is he didn't go big in here because it was uncertainty on the long-term price of oil. After Russia invaded and decided to destroy itself from an intelligence perspective, after that happened, that was the confirmation of low risk, high reward, or low risk, good reward in this environment, and that pushed Buffett to buy. We'll discuss more of that next week, so smash that like button so that you get notifications, support the channel, and subscribe if you haven't, and smash that notification bell so you see the notification and you see whether the video I make is interesting for you or not. Let's talk further about the gambling on Wall Street, because that was also what enabled Buffett to buy so much. In 11 trading days, he bought 14% of Occidental, or 25% of the float, as 40% is owned and should be stable like index funds. Then there were also comments that God is just because this happened to Robinhood, to all the traders out there, and to all of them that incentivize you to trade, to do what's destructive for you, so that they can make more money. So Charlie Munger says that it's terrible what Wall Street does to you, enhances you to trade options, call options, this and that, so that they can make money instead of making you just an investor, buy something, you like the cash flows, you like owning that business, and that's it. And the message from Charlie Munger that's applicable 2022 and ever is always ask what's the incentive. So you watch this video, you have to ask yourself, what's Sven's incentive? That's a must. And then you can also understand the video better, etc. What is Sven's incentive? Well, there is the stock market research platform. Sven is a researcher of stocks, and Sven over the week does research, on weekend does videos, and that's what I do. I like sharing, I like educating. I think I give value here on YouTube by educating people, and I also think, given the feedback I receive from my subscribers, also I think I give value on my research platform. So my incentive is, I hope, a win for you and also a win from my business side for me longer term. Plus, I really enjoy doing this. And I also try, and you have seen in yesterday's video, I also try to go counter that trading mania, stocks following, stocks go up, stocks go down, where will the stock go? I try to focus on businesses. It's very hard, it's incredibly hard what Buffett also does, but I try and I do my best, and that's also the value I try to give through this value investing channel, and that's also the message that Charlie Munger and Warren Buffett tell you always and constantly repeat, that you stay away from gambling. Always ask yourself, who is making the money for sure? Me or the other? What's the other's incentive when it comes to money or whatever in life? Now, the next topic we have to touch is merger arbitrage. And some people think, okay, markets are uncertain now, let me go into merger arbitrage and I'll do better there, or achieve better returns with better risk. And also, this is comment from Janne. He says that the markets are crazy, in short, and I have opened a position in Twitter and Activision, so these are workouts or merger arbitrage, and when the deal closes I should get a good return. That's correct, but there is also a risk. If the merger doesn't close, you end up owning the business, which is again investing. So Twitter, now it's trading at 49.80. And if the deal closes and Elon Musk buys it, then you get a 15, 10, 12% return, easy peasy, but the deal must close. If the deal doesn't close, then you go back to where it was, which is 30, plus you end up owning Twitter. That's the risk and reward, and that's very different with Activision, because Buffett knows that the value to an owner is 90, and it is a good business, it is trading at a normal PE ratio, there is a dividend yield, so nothing bad with the business. So even if Microsoft, that has the money to buy it, doesn't buy it, okay, it will go down, but he will then hold a good business, and that's the risk and reward value investing merger arbitrage. If the worst case scenario happens, because of regulations, the deal with Microsoft doesn't go through, he's happy owning that. That's the key difference with Twitter, gambling, bet, I'll make 10%. Merger with Microsoft Activision, I will make 20% if it goes through, depends when, but if not, I still own a good business. So keep that in mind when it comes to merger arbitrage deals. Then also on Bitcoin, so Charlie's advice is simple. Don't. From Buffett, he then explained, what would I do with Bitcoin? If I have all the Bitcoins, what can I do with it? I can just sell it to the fool, paying more for it, so it's not investing, it's not productive assets, but of course a quarter of the population gambles in it, and that's their take. So again, that's the world we are living in. But Bitcoins, if you check the chart, goes up, and that's the hardest part when it comes to investing. Chasing that hot trends, growth stocks and everything, as we have seen yesterday, you're always the idiot if you are not going into that. The world is going to change and everything. But Buffett says it's too risky anyway, so enjoy that if you do that. If you're still watching this video till now, I know you are not a gambler. And the messages to apply now is avoid owning debt, better be a borrower. So still, rates in the US have already gone higher, in Europe not yet. So if you can lock in a long-term loan with 10% inflation and you lock in 2%, it's the deal of your life. And the final conclusion with inflation is find a business that you like to own, that will be there 10 years from now, whatever happens. So if it will do great, you will double, triple, quadruple your money. If not, you will just get the dividends, and you will still own some real value that will protect you from whatever happens next, because not even Buffett and Munger can predict what will happen next. Thanks for watching, check my other videos, and I'll see you in my next video.